What's going on, YouTube family? Welcome to Automotive Life. My name is Lucky, and today we're going to be talking about something that's going to have a major effect across the automotive landscape. So you may have seen in the news that one of the world's largest automotive groups, Autonation, just purchased a bank, CIG Financial. Now, I know you guys may be thinking, well, Lucky, why is this such a big deal, and why is this going to have ramifications all across the automotive industry? Well, let me tell you why. First, we're going to start off how traditional auto lending works. Now, when you go out and get an auto loan, depending on your history, so let's say you bought a $25,000 car, you paid it off, you have a few other cars paid off besides that, most banks will look at that loan and say, okay, this guy can go maybe 40, 50% higher. So they'll give you maybe a $35,000, $45,000 loan because of your history. Now they're going to look at your credit score. Okay, what's his score? Is it 720? Okay, this will determine what your rate is. So the better your credit is, the lower the interest rate is, so this way it gets you more qualified buyers. Next, they're going to look at your income and your job time. Has he been on his job for 6 months to a year? What can he afford? And this is what's going to determine what the actual length of the loan is. Also, on top of that, they're actually going to go in and see what kind of car you're buying. Is it something new? Is it something old? So this way they can add more information to give you maybe a 60-month term or an 84-month term. This is how traditionally banks loan to consumers. Well, during the pandemic, we all know that all those rules were basically picked up and thrown out the window because traditionally banks would lend about 110 to 120% LTV for well-qualified customers. This means that if you wanted to buy a brand new car with no money down and maybe throw in an aftermarket warranty, we could finance all of that with basically no money down if you had good credit. But during the pandemic, we've seen people lending 150 to 170% of LTV. And the justification was cars were rising up in price, there wasn't any supply around, and then on top of that, they were able to basically throw out their traditional rules. So when it came to income, as you saw, 90% of the loans that basically were produced from 2020 to 2022 did not have income verification, which was absolutely scary. All they cared about was the down payment and a pulse, and they basically threw them out there. Plus, the government was printing free money. There was banks that were buying the really bad paper, turning it up and selling it off 5 minutes later, because you have to remember, the more the banks lend, the more money they make. Well, guess what happened? Fast forward to 2023, and now we're seeing record delinquencies and defaults like we've never seen before, higher than the '08 recession. So now with banks facing record high default and delinquencies, they start to change their game plan because as the bank starts getting more risk, they slowly adjust their numbers. So now they want maybe more down payments, better credit, they're going to offer you a less amount financed, and they're going to change things to offset their risk. This is what banks do. And traditionally, as a dealer, if the banks are not lending as much and they're basically doing the amount financed to even lower amounts, requiring bigger down payments and better credit, us, the dealers, have to find better customers or adjust our prices of vehicles. And this was one of the things that I really hung my hat on, that when these banks start to default and they start having these record high default rates, the prices of vehicles will go down because banks do not want to take the risk. So now that the banks are tightening down, are these major auto groups and dealerships actually lowering their prices? No, they're trying to skip around and do what's called captive lending. Now, I'm going to give you a few different scenarios for this. Now, Ford Motor Credit, Toyota Financial, and even Hyundai and Honda and all these other guys, they all have some sort of captive lending. Now, what is captive lending? This is a dealership's program where they can lend to themselves at a special rate. So sometimes they'll give maybe 0% if you purchase a car for full sticker price with the warranty. It allows the dealer to sell more cars and give basically sweetheart deals to consumers for whatever reason. But also the big scary thing about captive lending is they can qualify what makes a good customer or not. Now, Ford Motor Credit specializes in a lot of bad credit. So instead of Ford maybe selling a used car for like $20,000, they would give somebody maybe $26,000 to buy a new Ford Focus that's on Ford Motor Credit instead of basically selling that out to another bank so they can make the money. Now, the reason why Autonation bought CIG is so this way they can have their own captive lender, because the Auto Group is not only a handful of franchise stores, it's also the first nationwide basically used car auto group. Their whole goal is to basically buy a bunch of franchise stores and turn them into used car centers to crush everybody, kind of like what CarMax did, and kill all the small independent dealers. Now, the reason why this is so scary is because you have to remember, Autonation has, I think it was 100 or 200,000 cars that they're sitting on. And just imagine if they have to knock off 5 to 10% of that. we're talking millions of dollars. So instead of lowering their prices, what did they do? They took whatever $80, $90 million and purchased the bank. Now they can set up whatever regulatory rules they want to lend to their consumers. Why is this a bad idea? Because now all their cars that they're upside down in, they could stuff some consumer in it at no problem. So if let's say they sent out the bank deal to, let's say, 5 different banks. This customer has an 800 credit score. He's got $5,000 down. The amount financed is $60,000. Some of the banks may come back and say, hey, you know what? This is a good customer, but we're not going to do the amount financed at 60 because the car we believe is only worth 55. So we're not going to give you a check for 60. So instead of them like shopping it to other banks, accepting the $55,000, they're just going to go ahead and roll it into their captive lending so they can basically finance the full amount of money. Now, not only does captive lending affect what they actually do when it comes to the amount lending, which is the LTV, which is the really scary part. They can do maybe 120, 130, 150, whatever they want to do. They can throw on a warranty, no sales tax, and maybe give the customer's down payment back and finance the whole amount. The big thing is they can actually determine who qualifies for a loan. And this is where I see the biggest hang up, and this is why I believe that the prices were going to go down once the banks tightened up. But Autonation doesn't have to worry about this. So Autonation can say, instead of having a 1-year job, maybe you can have a 1-month job. Instead of maybe your DTI being 20%, maybe it has to be 5%. So they can split it however they want to basically skew the numbers in their favor. And when you are your own bank, like I said, you can put whatever rules you want when it comes to lending. Now, why is this a bad thing? Basically, if anybody that buys a car from Autonation runs the risk of basically being put into a loan that's not a good loan. What I mean by this is most lenders always risk assess themselves when it comes to lending. They will only lend what the market allows. Just like if you want to buy a house, if the house is worth $1 million, they'll only lend you $1 million in the house. If you try to sell it for $10 million, nobody's going to finance it. The owner has to pay cash out of their pockets. This is how we keep a level and legal playing field. But with captive lenders, if they decide to, finance 150%, low down payment, add warranties and everything else, now these consumers are upside down even more. So when they go to a dealership to try to trade in their car, they're going to have so much negative equity, they have no choice. But the even more sinister plan is, guess what? If they can't get out of their car and they went to all the dealerships in town and nobody will take it because there's so much negative equity that no bank is willing to take this risk, because that's what we're seeing now, guess who can? Any bank that has a captive lender that can basically shovel this really bad paper down its throat. So people will naturally come back to Autonation to get another car loan because nobody's willing to take a chance on all that negative equity. And Autonation doesn't care. They just basically give the deal to CIG. They add that whatever $5,000, $10,000, $20,000 of negative equity and kick that can down the road. So instead of dealerships basically focusing on getting lean and mean and organizing their actual business and lowering their prices and moving their own inventory, they decided to go the other route and kind of cheat the system by buying a bank and be able to finance whatever they want at whatever regulatory things they determine. So this is why I'm telling people that the market is going to get really bad. I know a lot of people want the government to step in, but I don't think that's probably the best thing for the industry, because remember, when the government steps in, I don't think anybody in the United States can actually afford a real car. Because if you think about it this way, if you try to get a home loan, they'll always tell you maybe you don't qualify or you don't afford for a $2,000 mortgage. But you could show them that you're paying a $2,500 monthly rent fee and they wouldn't care. So the same thing will apply if the government steps in and tries to regulate the automotive industry and when it comes to lending. So right now it's a little bit free. I know it's a pain in the ass, but there's certain things that are good about it. Now, when I see auto groups like this purchasing their own banks, I already know what they're doing and I know how they're skating around the thing. And the worst thing is when CIG or Autonation bundles up all their crappy paper that's overpriced, remember, some banks don't hold all of their paper. They're probably going to look at their numbers and say, okay, well, these cars were into a good LTV, loan to value situation. All these ones were way over leveraged. Let's go ahead and bundle these and sell these at maybe 80 cents on the dollar. They'll be AAA rated because they're all 800 credit scores, even though they owe way more than what the car's worth, and sell them off. And this is how banks and dealerships move what's called paper around, and it's basically screwing over. So who buys this paper? Hedge funds, financial institutions, maybe your retirement plan. All kinds of people, even like dealers myself, will go out and buy other people's auto loan portfolio as a basically source of income or revenue stream. So these are the things that's basically affecting the market. I can't believe that these guys are still trying to do this out in public, which I guess people don't really understand why they're doing this and the bad thing about it. But I wanted to share this video because I thought it was very interesting. It was a last minute video. I had a different one planned for today, but I wanted to share this information with you just to kind of get you guys thinking. But I'd love to know your thoughts in the comment section below. What do you think of dealer groups actually buying banks to basically kind of skirt around lending restrictions to do their own lending requirements so they can basically finance whatever they want? Do you think that was a smart move? Do you think it was a bad move? If you were able to put some sort of rule regulation, what would you do to change the auto lending atmosphere? So anyways, I want to thank you guys so much for watching. Make sure you like and subscribe. I truly appreciate it. We're at 400,000, which is the largest, I believe, dealer or auto group or automotive YouTube page on YouTube. So I thank you guys so much for that. Once again, follow us on Instagram at Lucky Lopez, and we'll see you next video.